Hello. Today's video is going to be a continuation of my last one. In the last video, I talked about why I thought Bitcoin was going to crash. Today, I'm going to go through and take the next step and talk about what I think might happen when Bitcoin does crash. I say when because I don't see any signs of the current progression towards a monetary asset being stopped. If anything, I see that being pushed more aggressively. Now, to get into the discussion, please be sure to check the last video, as that will help you understand why I think Bitcoin is on borrowed time. And today, the consequences of what that really means for the market as a whole. So let's get into it. I'm Robert. For those who aren't subscribed, as my YouTube statistics are telling me that I'm starting to pick up a lot of new people not subscribed. So please be sure to hit that subscribe button, hit the bell icon, and like the video. And let's get right into it. Bitcoin is spiraling more and more towards a currency. That is going to cause a full crash of Bitcoin. And it's really going to go beyond Bitcoin itself. Now, of course, what a lot of people will tell you is that they believe nothing will happen except that Bitcoin will crash. The rest of the market won't feel it. That's wishful thinking. The rest of the market is going to feel it, and it's going to cascade quite significantly. About the only market that won't feel it, or most likely won't feel it, will be the Forex markets. But the stock markets or stock-based ETFs on Bitcoin and the cryptocurrency market as a whole is going to drastically feel it, and it will have a very long-term cascading impact. So let's get into the nitty-gritty of what I think will happen if Bitcoin crashes. I'm going to pick arbitrary values that seem to be within range of what a lot of global economists believe Bitcoin's price could go down to. Bitcoin could drop to $800 to $900. So we'll settle for $800 as a simple rough basis. So if Bitcoin collapses to $800 and stays there, that is, it has successfully become a currency. Its price volatility is now consistent with a currency. The commodity part of it is gone. It will not appreciate anymore or depreciate. It will simply remain at the level of roughly $800. Somewhat like USDT or USDC or some of the other stable coins on the market. Very little volatility, very little price fluctuation. So any currency, ADA/BTC, for example, will also feel that impact, or what is commonly referred to as a base/quote. The quote currency is the currency that you bought your asset with. Common market practice is fiat, USD, British pound, Canadian dollar, so whatever/USD. The quote currency is always the right-hand side. The base currency is always the left-hand side. So ADA, Bitcoin, Ethereum, BNB, it doesn't matter. It's always base/quote. And the quote currency is what we're going to talk about, being Bitcoin. So let's say we purchase ADA/Bitcoin or BNB/BTC. Or even Link/ BTC. All of these coins depend upon the price of Bitcoin as their foundation for their value. For example, if you purchase BTC/USD, well, the current price is roughly around $20,000. We'll keep the numbers simple here. The dollar is worth 1, so it's 20,000/1. The price doesn't fluctuate. So your value is $20,000. But now if you take an asset that does fluctuate, for example, let's take a base currency that has a value of $5 and a quote currency that has a value of $100. Well, if the quote currency loses 50% of its value and it is now worth only $50, whatever your base currency is, in this case we're using $5, is now automatically worth only $2.50. Even though its own price didn't change, it loses automatically 50% of its value because the quote currency lost 50% of its value. So basically, from the standpoint of the equation, we had 5/100 for the prices. Now we have 5/50. You work out the mathematics and you can see just how much you've really lost. That is how the market works in terms of valuation for both a base and a quote currency. If your base currency goes up and down and your quote currency goes up and down, your price at the moment is going to be the combination of the two. So most people will get into the market by buying Bitcoin with USD or BTC/USD. So their value is kind of fixed at whatever the current market rate of BTC is. So now you've bought one BTC, it's worth $20,000. Now you want to go and you want to buy Link. Well, that might be worth $5, so 5 over 20,000. That becomes your actual value. And as Link's own price fluctuates and Bitcoin's price fluctuates, you'll gain and lose on those two fluctuating. That's all fine and well. And if Bitcoin's prices drop, of course, Link's is going to drop inherently. But then Link could also drop on its own, irrespective of Bitcoin, which incurs a double loss. Now, if Bitcoin goes up in price and Link goes up in price, you will incur a double profit. But the two are both very true of each other. And it goes one step beyond that. So we can already see how the cascading effect will take place if Bitcoin loses its value. And the thing about this is really important to understand is that it doesn't matter if you've purchased Link with the British pound or the US dollar. Because somebody else purchased Link with BTC, the inherent price volatility introduced is automatically going to affect Link purchased with British coins or US coins, stable coins in other words. The price will automatically fluctuate based upon somebody else's purchase in the market because of the amount of volume and trading that has taken place. So even though you only use fiat or a stable coin in your trading, your price automatically takes effect of other asset purchases that you aren't really related to, because it affects the entire market. So if somebody purchases 1,000 Link with Bitcoin and you only purchase 5 Link with fiat, your purchase is going to be severely diluted based upon the volume and market weight of the link/BTC purchase. That's just basic economics. Simple division, really. And you can see just how dramatic that can get. But it gets worse. So the cascading effects of Bitcoin's crash are going to be felt very badly. Really because of Bitcoin's dominance within the market. That is, you can't trade any base/quote currency at any time. You can't purchase Bitcoin using ADA as your quote currency. If you had a complete free reign market of that magnitude where Bitcoin wasn't so dominant, then the effects wouldn't be as severe. But because of that dominance, the effects are going to be magnified. So let's get into the elephant in the room. Talk about the one pair that will sink the entire market. The entire cryptocurrency market, roughly 97% of it, will be directly affected by this one single pair. Ethereum/Bitcoin. Now, Ethereum will be affected, but when Ethereum is affected, it will affect over 3,500 ERC20 tokens or coins. 3,500 different coins depend upon the stable value of Ethereum. And like Bitcoin, when Ethereum's price fluctuates, all 3,500 coins have a direct fluctuation on top of them. So what happens if you purchase Ethereum with Bitcoin? Well, when Bitcoin's price fluctuates, it will have an immediate impact on the value of Ethereum. So any asset purchased with Ethereum, like BNB or Link or any of the 3,500 coins that exist, most of which I actually don't even know, but any of these coins, they will have a direct impact in price volatility and price depreciation. In fact, I did a lookup of that to go through just how big this market was. Let me bring that up. For example, out of the 3,500 different ERC20 tokens, the number one on this list, according to Cryptonomist, is a coin called Vera1 that has a market cap of $893 billion. So $893 billion at any given moment could lose 50% of its value just because of Bitcoin. That's just one of 3,500 different assets. So the pair, Ethereum/Bitcoin, controls roughly 97% of all market cap volume. So if Bitcoin crashes, all of these assets connected in some way will crash with it. And the effects will simply cascade beyond that. In essence, it could literally destroy the entire market, depending upon what assets get liquidated, because of losing 50% value. And then people begin panic selling Ethereum on top of the Bitcoin losses. You've now lost more value. And then people start selling any of these individual 3,500 coins. More value. And at some point, the market is just not going to be able to sustain the cascading collapse. So what you end up with is a very significant problem that market dominance has created. Forex markets have a very strict policy where all of the quote currencies are fiats. All of the base currencies are fiats. So the playing field is pretty level between them, even though there is price volatility. In the cryptocurrency markets, there's no level playing field with any other quote currencies. They could range from 10,000ths of a penny to $67,000. For example, Vera 1, as of right now, is worth $51 and change. So if Bitcoin loses 50% of its value, it is automatically going to affect Ethereum, and that is automatically going to affect Vera 1. So you're going to have that cascading effect across the board. That really is the impact of what's going to happen if Bitcoin crashes. It will crash the entire market. And I base this on pure mathematics within the market, both of the 2008 crash and with the market crash that took place March of 2020, to really begin to see how those cascades really work. And you can go into sites like TradingView, TradeStation, or any charting platform that recorded history. Yahoo Finance does a good job, for example, of going back historically where you can compare different price volatilities. And you can see that cascading impact as each asset loses value. Now, it will have an impact on the stock market because of Bitcoin ETFs. But because that's the base currency and not the quote currency, the impact I don't believe is going to be as dramatic. I think the overall dramatic impact is going to be within the cryptocurrency market itself and having Bitcoin collapse to an $800 value, or roughly 90% of what it was once worth, I think will collapse the entire cryptocurrency market. Not something a lot of people want to admit. Not something a lot of people want to have happen to their investments. And this is the number one reason why I vehemently don't like buy and hold. You need to have an exit plan. You need to think about the worst case scenario. And this is definitely a worst case scenario. If Bitcoin collapses in price value, it will collapse the entire crypto market sphere. Every single asset in one way or another will feel that impact. If you don't have a proper and stable exit plan, you're going to lose your portfolio. And depending upon what you're holding, you might lose all of your money as well. Plan for an exit. Plan for the worst case scenario as commonplace. At the current push of dealing with a currency format versus a commodity format of Bitcoin, that push is only going to exacerbate this problem and really is what is causing this problem. As I said in my last video, you can't have a commodity with unlimited price appreciation or depreciation functioning as a currency. It just doesn't work. And we are going to see that in the worst way imaginable if this continues at this level. It will destroy the entire cryptocurrency market. And that market may not survive. That's the big takeaway that I see as a real world problem if Bitcoin does crash down to $800 or $900. You will have some assets that do survive, like Ethereum. Its market capital is strong enough that it might survive, but it's still going to feel it. A lot of the smaller assets that have lower market capital, they won't survive. Just like in March of 2020, a lot of real estate trusts collapsed and were liquidated. They didn't survive. This is a problem you need to think about, you need to plan for, and you need to think about your exit when price starts dropping. Now, for my own personal research, my product, my work, what I have built, I've built everything on accumulation and on that strategy, which means that's a very real, serious concern that I could have my entire market wiped out. And as accumulation strategy is designed, it doesn't sell at a loss. It looks for opportunistic purchases as the price drops. The problem is, of course, if the price never goes back up, it's left in a hole. And that's why I've emphasized constantly, think about your worst case scenario. Think about what you trade, how much you trade, and plan for the worst. For example, right now I'm trading XRP. That's my current dominant coin. I plan for 100 positions at a fixed value. So no matter what the market does, my risk is only at that value. And that value is a very limited amount of my budget. Now, if you trade 2 or 3 or 4 or 5 assets, that's only going to cascade appropriate to those assets. So you need to think about your budget and how much you're willing to risk if the worst case situation does happen. And I really should say when the worst case situation does happen. Because at the current rate things are going, it is not a matter of if, only a matter of when. Bitcoin is going to crash. And when it does, I firmly believe it's going to crash the entire market. Be prepared. Think about your trading. Think about what you stand to lose. I've talked about markdown before, and I've talked about drawdown. Don't let yourself be lulled into a false sense of security. Whatever you have in the market is what you are going to lose when this crash takes place. Plan for the worst. Expect it. Accumulation is a wonderful way of making money that's low risk compared to other techniques. But it has its own risks associated with it. You need to research every single asset you trade. You need to understand what your exposure is and what your real risk is. Don't follow fake numbers because they're not going to help you in a real crash. Whatever money you have in the market, that is your exposure. That is what you have that you could potentially lose. Because when things go bad, they're going to go bad in a very quick way. And it will always be when you're not near your computer, tablet, or phone. And even if you were, it's not going to matter. Machines move at lightning speed. Even if you're sitting at your desk with your phone open, watching your portfolio, where you can hit the buy and sell button right then and there, the damage is done before you even have a chance to register it. And selling is only going to guarantee no chance of recovery. It guarantees no chance of further losses, but it guarantees no chance of recovery as well. And the other problem that you're going to run into is you and hundreds of millions of other people worldwide are going to be doing the same thing. And like March of 2020, it might take 20 or 30 minutes for your order to actually be processed, which means the hemorrhaging of your account won't stop. Even though you set up for a sell, it won't actually trigger until the exchange can process it. So be aware of exactly what you are trading. Be aware of its value and be aware of its intrinsic risks. Not just its direct risks, but the risks of whatever your quote currency is, and the risks of the market dominance. Plan well, and you'll survive the market when it happens. Like, subscribe, share this video, leave a comment. And I really want to thank the people who left comments on my last video asking questions, because those questions are important. I got a flood of emails and messages in my Discord support server that really got me thinking about just how bad this cascade could take place and will take place under the right circumstances. So, until the next video, and until next time.